just closed my first 100K crypto trade. And in this video, I'm gonna show you guys the step-by-step strategy and techniques that I used to enter this position, the mindset behind it, and how I got the market sentiment to make this happen and how you could have too. Make sure you watch this video and take notes, because with the right information, you guys could have done this too. Bull markets look easy from the outside. Everything's green, but here's the truth. The markets pull back. They will correct. And those pullbacks, that's really where the real money is made. My strategy is really simple. I wait for major pullbacks on Bitcoin, 15 to 20% corrections, and then I start looking for my entries. Why? Because that's when fear takes over. That's when people start to panic. But that is personally when I start to look for buys. I personally don't buy the hype, I buy the fear. So I wait for when the market is in a fearful stage and most people are panicking. I'm gonna go over this on the charts with you guys and explain how I was able to have my first six-figure trades on crypto using this strategy. So like I said, I don't buy the hype, I like to buy the fear. Because bull runs, they always have corrections. So the best entries in a bull run are gonna be coming on major corrections. You don't wanna be buying with the hype on the green candles when everything is going up. You wanna be able to convict yourself in times of fear. Bitcoin, for example, has been going up and a long bull run, we can see, but there has been some major corrections. Now, what is a major correction? On Bitcoin, a major correction is anything over 20%. Now, if Bitcoin drops 5%, that's gonna affect the market a lot. But major corrections are what I look for throughout the year, and these don't happen a lot. You need to be really patient with this strategy. So as we can see, Bitcoin's been in a bull run for the majority of the last couple of years. Recently, we've seen the market go into a 31% correction. Now, if we go back on Bitcoin, there's been other times where it's dropped like this. If we go back to last year, we can see from here to here, the market dropped 23%. That's a major correction. At that point, the market is going to be what we say is bloody. There's gonna be blood on the streets. There's gonna be fear everywhere. Sentiment is gonna be really in that panic stage where people aren't gonna be as convicted and as confident. When we look at something called market sentiment, right, we can gauge into when the market is overconfident or less confident. And this can be times of greed or even times of fear. So a market sentiment can really gauge confidence, right? And if Bitcoin's down 20%, other things are gonna be down a lot more. Bitcoin dropping 5% isn't that much of a major correction if you're holding only Bitcoin. But if you're holding other coins, it's gonna impact those other coins much more, right? Now, for a major correction to occur on Bitcoin, you gotta be thinking like 15 to 20% is kind of the starting point, because major corrections can go into 30%. We've seen this historically. We've seen anywhere from 20 to 30% corrections happen on Bitcoin, and that's usually what catapults it back up. If we even look at this chart on Bitcoin real quick and we go back, there's been some of these corrections throughout the last couple of years. Here you can see Bitcoin dropped 20%. What did it do? It recovered. Now, most people would have been buying here, or most people probably would have been buying after this big blue candle that shot up. Whereas when price was down 20%, most people wouldn't have been buying. Most people wouldn't have been as confident to pull the trigger. It would have been people jumping in more and becoming more confident, like, okay, it's coming back up here, right? After it pumps. You can even see again, it went for pretty much the same drop. Bitcoin dropped again, 21%, almost 22% there. Again, the same sentiment would have came in. These types of candles and these types of drops can quickly create a market sentiment, which is fearful. In crypto, we have a cool little tool called the Crypto Fear and Greed Index. This can analyze the fear and greed for us. It's kind of like an indicator, kind of similar to like a stochastic that goes overbought and oversold. Now, when it comes down to time frames, you're looking at the weekly chart for major corrections. Major corrections aren't gonna be on the 1 hour, they're not gonna be on the 4 hour. We're really just looking for these to happen on a weekly time frame. We wanna see clear evidence of, okay, the weekly has clearly dropped and corrected and gone into that major percentage zone, 20%, 25%, 30%. That's when fear takes over. That's when panic takes over. That is personally when I buy. I've been through Bitcoin and crypto since 2016. So I've been through a few bullish, bearish, bullish, bearish, bullish, bearish cycles. So I kind of understand how to block out all the noise in crypto when things are going as bad as it looks. For me, I have a strategy, and this is kind of it. I'm gonna talk to you guys here about the market sentiment, the mindset, and the strategy and planning behind this, because it didn't happen overnight. It didn't happen in one day. This was something that was planned beforehand and as it was happening when the market was dropping. And I'm gonna explain everything because the trade was on Solana, as you can see here. So I have a trade here on WIF and Solana. One's up $63,800 and the other one's up $42,000. Now these trades are already closed, right? Here's the Solana trade closed, $81,640 profit. Exited at a good price, because if we look at Solana at the time I'm recording this video, it's at like 155 right now. So got out, good timing. There was a lot of planning behind this, some preparation behind this, mentally, psychologically, I would say. A lot of mindset goes into this aside from the charts, because the chart part is actually really, really simple. I think you just have to have a really, really clear and narrow mindset and experience for this. I don't recommend leverage trading. It is super risky unless you have years of experience. I think it's something that you can understand after years of experience in the market. Like I said, I've been through bullish, bearish, bullish, bearish, bullish, bearish. So I myself have been liquidated in the past before. So I can learn from experience, and I can talk from experience with this too. It's not good to just rush into leverage trading. It's a long-term strategy that I'm going to teach you guys here on how I was able to snag these trades and the thinking behind it, all right? So Solana, when we look at Solana, started buying here on Solana around this price. Now, mind you, at the time, Solana was down 62%. So for me, it was like, okay, this is a bottom that's coming in. The market was at extreme fear. So when you're looking for good entries in a bull market, you want the market to be in fear, right? And this is a good time to start DCAing or entering your position. You don't have to enter a full position at once. You can start entering a position slowly, maybe day by day, week by week, take it by time. But as the market's in a fearful stage, it's better to be looking for buys or be thinking, okay, the market could turn out of this eventually. For me, it's better to be wrong early than right late, like everybody else. Kind of like I explained in the beginning of this video with Bitcoin, like most people are probably buying Bitcoin in the last couple of weeks as it cracked above 100K again. Whereas when Bitcoin was down 20% to 30%, most people were probably not as confident to start looking for positions in there. I even talked about this stuff inside my Discord with my inner circle. You can see Dog with Hat was one of the trades there, and I'm going to talk about that a little bit and show the chart here. I even talked about this in my inner circle because, like I said, this didn't just start right now as I'm recording this. I was planning this in March. So you can see here, March 14th is kind of when I started planning these setups. So we were in these setups for like 80 days. This was like a good hold. There was a drawdown phase, but that's where experience comes into play, and you just follow your plan, right? You make a plan your trade your plan. Now, trades like this, guys, it looks great, but they're not gonna happen a lot. You're not gonna find trades like this a lot. Maybe a couple times a year. That's it. It's a long-term strategy because it involves the weekly chart, first of all, right? We're gonna be focusing on the weekly time frame, and we want the weekly chart to have a major correction. The weekly, if you know basics of trading, you know the weekly chart is a high time frame. It's not gonna have a lot of activity, right? As candle opens and closes week by week, but we can see major corrections that do develop on the weekly time frame. And there's two indicators that can help us when the market is inside of those major corrections. So remember, a major correction is 20 to 30%, and you will see these. It may seem a time where the market is crashing and everything else is going to be down, probably 40, 50, 60, or even 80%. Like meme coins in this type of situation are gonna be down like 80% when Bitcoin's down 20, 30%. Ethereum's gonna be down like 60, 70%. Solana, same thing. You're gonna see the entire ecosystem get affected by major corrections on Bitcoin. It's good to gauge two things out when the market's making these types of corrections. One, where's fear at? What are the headlines saying? When you measure fear, anytime this index is below 40, The market is in a fearful stage. People are typically panicking, all right? You can see throughout this chart here, that doesn't happen so much. So if you look over here, for example, to the left of the chart, kind of around September 2023 over here, which would have been like August in the middle, July. So going into like August and September here, you could see we were in a fearful stage. Where was Bitcoin's price at the time? $26,000. And it was fluctuating between 26,000 and 27,000. And then it rallied up to 35,000 after. The next time it was in the fearful stage, you can see was before the new year, actually, and kind of around the same time it was over here. You can see July, August, September, October. The market was in fear multiple times. So there was multiple times the market was actually in fear for a while here before it rallied out. And more recently, this is where I capitalized on this. You can see the market was in extreme fear. So I took this opportunity pretty serious because the only time that I could really relate to this type of volatility in my 10 years of trading was in COVID. And I remember the type of volatility and the market conditions that happened in COVID. So I took this serious, and it may seem risky what I did and high risk, but I'm sharing my experience with you guys because from my trading experience, where the market was in March and going into April of this year, I've only experienced something like that one time, if I can relate, which was in 2020 of February, March, when COVID-19 began, right? The markets were just as crazy as they were in the last couple of months with the whole tariff situation. So I was looking at the market from an opportunist point of view, like I might not get an opportunity like this for another while. And me being in the market for so long, I only see opportunities like this so much throughout the year and years where the market is down and things add up, where it's, okay, we're at a major correction, 30%. Everyone's extremely fearful. There's so much uncertainty going on. This is a buy the dip situation. Now, I didn't buy Bitcoin, I bought Solana instead, because I figured Solana was gonna move a higher percentage. So when leverage trading, it's kind of about percentage as well. If you're looking for bigger gains, like you could see the trade closed out at 81,640 profit. At the most, it was up $95,000 this trade. Now the whole position wasn't entered at once. We started buying when we recognized Solana was down about 50%. I mean, for me, it was like, could it go down lower? Yes. But it doesn't matter. This is still a buy the dip situation. People were asking me when Solana was at like $120 and $110, Evan, is it gonna go to $90? Is it gonna go to 100? Is it gonna go to 70? For me, it was like, who cares? It's in a position enough right now to get that return or that buy the dip situation, especially with where the market was at, right? So it did take some holding time. Solana went down about 67%. The whole entire market was down. Even Dog with Hat was another one we were looking at when this thing was down and everything was down and the market was at extreme fear. Even the stock market, for those of you who have maybe experienced the last couple months, some of you guys may be able to relate to what I'm saying. Dog with Hat was down 93%. So for me, it was like, if this isn't a buy the dip, then I don't know what is from my 11 years of trading, to be honest with you, from what I've been through and the situations, experiences, and trades I've taken. Even in my Discord, I was explaining Dog with Hat. Dog with Hat closed out at a big profit too. Even Dog with Hat, I was planning this position March 14th when Dog with Hat hit 50 cents. I was like, okay, this thing is nearing a bottom point. The market's at extreme fear. There's so much uncertainty right now. It's gonna have to rally out of this. Another thing can also be the stochastic or your RSI indicator. If you're oversold on the weekly chart, let's say the weekly, remember this all goes back to the weekly time frame. We're not looking at the 1 hour, we're not looking at the 4 hour. You can even use the daily to look for good buy entries on the stochastic. Maybe not as big of a swing style. Like if you're looking at the stochastic on a daily time frame, you can find good buy entries using the stochastic on a daily time frame, as well as the fear index in that time. Over a shorter period of time, you can measure fear for shorter periods of time and also look for when the market's oversold or overbought for selling. Now, when it comes to like a bullish strategy for me, right, on the weekly chart, if we're looking at the indicator like a stochastic, like if you're in a bull run and the market is bullish, your best entries are gonna come again in times of fear, major corrections, which those two can line up. A major correction is usually gonna take you to a fearful stage, and when the market's oversold. So those three things, and then I'm gonna add on one more fourth thing that takes some experience to do, but I'm gonna tie it in there at the end here. So keep watching as we go forward, because there's one more thing I'm gonna tie into all of this that you have to kind of be on top of as well. And for anybody watching this that's inside my inner circle knows what I'm talking about. All right, so the entering part, we've talked a lot about entering the market, gauging out when the market is in times of fear and panic is going on. It's really easy once you get used to seeing it over the years in crypto, because it happens a lot over time. Now, when it comes down to exiting the market, guys, it's kind of pretty much the opposite thing. And you want to be quick with this. You want to be robotic with it. It's like, okay, the market's in greed, the market's pumped, let's exit. So pretty much the opposite of what we do when we're entering in times of fear, because we know we're entering the market when it's in extreme fear or a fearful stage. We're looking to exit the market when it gets back to greed or extreme greed. We do not want to be over leveraging or leveraging ourselves too much when the market is in a greed and extreme greed situation. This is not the time to enter. This is either the time just to hold anything that you're in, if you're just gonna hold it and let it go, maybe break even, or collect your profits, or wait. So when the market's in greed, we're not looking for entries. The market can still go up, but we're not looking to position ourselves and leverage ourselves heavy when the market is in greed. This is usually the point where the market's already shot up and made those big bullish candles or green candles that people usually chase onto when the market pumps up. Or this is usually when the market's overbought. So when it comes down to entering and exiting, it's actually really simple. If you're in a position, right, and the market has pumped, or you're in a trade, or you're in a crypto, you're holding a crypto, and the market starts to enter that greed stage, this is probably a better time to exit that position or that crypto, because it's probably going to experience a sell-off. People taking profit. If you study crypto long enough and you go and backtest this, you'll see a lot of times when the market is in a greed stage, people will typically sell off, take and collect their profits. So you want to be aware of that. The market can go up when it's in greed, but you want to be aware this is usually a point where people start taking profits. So when it comes down to exiting, got out at 81 here, 181.94. Now, that was when the market was up here, right? Now, if you look, we were also overbought there on the weekly, entering overbought also in the daily time frame, way back in here. So it was a good time to start getting out of the market, because it was also an agreed point. So the last thing I wanted was to lose all that profit after all that time spent. You can see this had a really big pullback, a really big sell-off. So just a little tip of advice for you guys watching this that are thinking about entering and exit the market, or even when you're holding a crypto. If you look at Bitcoin and the overall fear and greed index chart, most of the time when the market's at a greed stage or extreme greed stage, what do you get? A pullback or a correction, or a major correction that takes us into a fearful stage. If we look recently, this entered greed, and we can see what the market's been doing since. It's been coming back more to neutral, closer to fear. So remember that. Make sure you take notes of this and study this on your charts. All right. So we're going to tie in one more thing with this before we wrap up the strategy video. But it's actually really simple when it comes down to it, guys. If you're in a bull run, you're in a bullish market condition, you want good entries. One, you're going to have to wait. Two, you're going to have to wait for major corrections, right? Which can take the market into a fearful stage, right? Another thing can be oversold. If your market's oversold, this is going to be pretty much the time where it's undervalued. Now, the problem is that some of you guys might have with this strategy is that it's on a weekly time frame. Again, it's through the year. It's not going to be a strategy that's going to give you, let's say, scalping entries or day trading entries. If we were to do this strategy on the daily, then we could get entries maybe monthly. But the way that I capitalized on this trade was looking at the weekly chart, right? That major correction that started on Bitcoin started to focus on Solana, when Solana was here at about 50%. Also oversold. So you're not gonna see this a lot in the year, right? We're looking at an entire year here. You can see 2024 over here, 2025, and continuing forward. Over a year here, how many times is the market oversold, right? So for me, remember this, it's better to be wrong early than be right later on. What does that mean? Like, think about like people who have been buying maybe the last couple of weeks here versus me. I was buying in here. You can see the position, right? Exit price. So held it all through this. Was I early? Was I wrong at one point? Yes, but it's better to be in that situation because when the market makes that move out, you're gonna be much more profitable, right? And when you're looking for entries, it's something you have to gauge out. Obviously crypto, you have to be experienced with this style of trading because crypto is obviously very fast and there's a lot of liquidations that happen. That's why you have to wait for these things because usually when all these things start to line up, a lot of liquidations have already occurred by that point. Like by the time the market's reached oversold, a lot of stuff has already happened at that point. A lot of down movement has happened. By the time we reach the oversold stage, a lot of events have occurred. By the time we get to fear, right? By the time we reach fear, a lot of things have happened. You're gonna see a lot of liquidations, a lot of headlines, maybe bad news, good news, right? So when the market's in these stages or getting to these stages, think about it like Solana going down here, right? There would have been a lot of liquidations in there before it rallied back up, right? So this is gonna be a good swing trading strategy throughout the year, right? These are some of the things you wanna tie together. Now for me, right, what held me to be convicted to hold these types of positions, right? I'm explaining the strategy behind it and a lot of it is gauging the market sentiment, analyzing the masses. So seeing where most people are, because when Bitcoin was here, a lot of people were calling for lower Bitcoin, lower Bitcoin. I was doing the opposite, right? So kind of observe the masses, do the opposite type of way of thinking as well. So the last thing you guys gotta be doing also is kind of keeping up with news throughout this time. And we have it all recorded inside of my inner circle because every Saturday and Sunday, all throughout March, all throughout April, I would talk about this stuff inside of my inner circle community. And anyone in my inner circle knows I like to do weekend calls on Saturday and Sunday and talk a lot about crypto and things that I'm doing. So a lot of this is also keeping up with the news and understanding there's times where the market can have bad price action, but good news underneath that. So next time the market corrects, guys, don't panic. Be ready. Corrections can be setups in disguise. If you guys got value from this video, drop a comment, drop a like, and remember to subscribe to the channel.